Hello, this is Joe Pryor with the virtual real estate team in Oklahoma City. I'm here with Henri, my toy poodle, who likes to be in the video, although he'll probably sit down and sleep here for a while. I hope it's not me that's putting him to sleep, of course. What I wanted to do is talk about a new investment opportunity that I have for you. If you're interested in creating wealth through investing in real estate and having real estate as positive cash flow, as income. I've been involved in investment real estate as a specialty for the last 17 years out of my 21-year real estate career. I've done training through CRS, through CCIM, commercial training. Done a lot of training over those particular amount of years because I really want to make sure that I can deliver the right product with the best value to you, and that you have a really good idea about what your return on investment is. That's where it all starts. Is what kind of a return am I getting on my money that I'm putting out? What kind of risk is there to the money that I'm putting out also? Those are two very important features of any kind of investment analysis. Now, in the previous videos, I've talked about traditional Fannie Mae, which is a 20% down loan. I talked about special financing through the VA. When they have a foreclosed property, there's 5% down on the VA. And there's some Fannie Mae's that are 10% down on their foreclosure properties also. So for those of you who like leverage, there's some good properties out there. There's some good programs out there for you to be involved in. Now, for some of us, though, we have a lot of property. Now, to Fannie Mae, a lot of property means 4 mortgages. It means that I've got maybe 1 primary house, my house that I live in, and 3 investment-type properties or a second home thrown in there. And once I get to those 4 properties, then Fannie Mae makes some changes on what I can do from that point on. Now, they have a limit of 10, but after 4, they raise your down payment to 25%, and they're asking for 6 months PITI, principal, interest, taxes, and insurance, on every property that you have. So that can mean another $40,000 that you have to put in escrow, or $40,000 in like a retirement account, a 401k, or some type of retirement account that you have to show that you have. And you may not want to do that. So what can we do, if you have 4 mortgages or more, or 10 mortgages where Fannie Mae is not even available to you anymore? Well, what I have for you today is a builder that builds new homes. Now, we've been working on this program for quite a while, and of course, financing for investors is a key factor. If you don't have cash, then you need financing. So for those people that are 4 mortgages or more, or 10 mortgages or more, we have a local bank that will finance you with a credit report. In other words, you need to have a 700 credit score, and that's really all you need, that and the down payment. Now, what we're doing is 40% down, so it's 15% more than that Fannie Mae, but we're not requiring anything beyond that. In fact, on this new construction loans that we're giving you on homes to be built, we're actually paying your closing cost, including your first month's insurance. So your 40% is it, because typically you're going to have 5 to 7% more expense if you go through normal financing on that 25% down. So you're pretty close to 40 at that point. So we pay your closing costs. Now, the other thing that I think is very valuable to you is this is new construction. Now, most of my investors are out of state or even out of country. I do have local investors, but the majority of them are not from here. So you may be in California or Seattle, you may be in New York, you may be in Europe, you may be somewhere else, and you're not here. In other words, you can't drive by to see how your houses are doing or what's going on. Now, we have a turnkey operation here. I have bank financing, I have mortgage people, I have insurance people, I have great property managers. We have a total turnkey operation. The thing that I found out over the years about investment property is that it's passive income. In other words, you have a job. You have something that is active income that you're working on almost every day, and you also have a life. You have a family, you have activities. You might like to play golf or tennis. So you want real estate investment to be relatively low risk, but you also want it to be passive. You don't want to have to watch it like you watch the stock market, wondering what it's going to do the next day. One way to take care of that is a great property manager, and believe me, I've got the best I've ever seen. The other way is to have a low maintenance house. And this is where new construction comes in. This is what's so good about these properties because they've never been used before. Everything is brand new. Everything is warranted. For instance, the heat and air is warranted for 10 years. So you're starting out with nothing that has any wear and tear, and you're starting out with warranties against any kind of defects in materials and workmanship. That helps create your passive income. There's less for you to worry about in that new construction. Now, another thing that's very valuable about new construction is the appeal that it has to the renter. Now, we use $155,000 and up, which is a really nice house in Oklahoma City, usually a 4-bedroom with a 3-car garage, because we're getting a lot of executives coming into Oklahoma City. We're only at 6% unemployment. That is supposed to be still dropping, by the way, and we're getting really good jobs, like 550 Boeing engineers at $150,000 to $200,000 in salary, and they want a nice house. Now, one thing they like about the new construction, of course, is the utility cost. It can be $100 to $200 a month to rent a new home savings as versus getting into an old home, and some of these old homes don't even have proper insulation in the walls or conventional floors or old central heat and air systems that are not very efficient. So it has a strong appeal to the renter, and they're willing to pay a little bit more for that privilege, for the high ceilings, the big closets, the big bathrooms, and the new kitchens. So we maximize the amount of money that we get for the rental. Now, to give you an idea, the last one of these that we did, it took us 3 days to rent. We actually have a waiting list at this point of people wanting to rent these houses. Now, we also look at supply and demand. So these houses, are in areas like Edmond, Oklahoma on the north side, the Deer Creek school system, which is Edmond, Oklahoma, as well as the Edmond school system. These are very, very valuable places. The community is terrific. The school systems are outstanding. People want to be there. I could sell 40 houses today and fill them up. Now, we're always going to stay below the supply and demand because we want your rents to go up. And if we have too much supply, that really won't happen. And you're not happy, and Henri right here is not happy either. So that's what we want to do. So to summarize, it's new construction. It's typically rented before you ever close on it. We'll start finishing these homes in May, which is a peak rental period all through the summer. May, June, and July is when most of these houses will be ready. It's 40% down with the bank, 25-year AM schedule, 5.25% interest rate. Now, I have other details about how this goes about. We have closing costs paid. It's a terrific way to get started with positive cash flow and new construction that's not going to tax your brain or your time. So if you have more information that you would like to receive, please email me. That's joe@joepryor.com, Joepryor, joe@joepryor.com. I'll be happy to send you out more information. I'm Joe Pryor with the Virtual Real Estate Team in Oklahoma City, where we deliver traditional real estate value with the speed of technology.